Between the dates of April 13th and April 19th, 2026, the global financial world experienced a bizarre collision of realities. A quick note before we get into the details. This video is for educational purposes only and does not constitute financial advice. Globally, the headlines were dominated by severe geopolitical tension. Navies mobilized, trade routes were choked by blockades, and a genuine fear of expanding conflict gripped international markets. This animated chart tracks the S&P 500 against those broader global indicators. As you can see, right in the middle of this geopolitical storm, U.S. indices pushed straight up, hitting new all-time highs. Down on Wall Street, the atmosphere was a mix of confusion and extreme profit. Historically, major armed conflicts and supply chain shocks trigger massive market sell-offs. We need to look at the exact mechanics of this week to understand why investors decided to buy into the panic instead of running from it. The extreme volatility started early in the week when President Donald Trump ordered a sudden naval blockade. This map highlights the target, the Strait of Hormuz. It's a narrow waterway, but roughly 20% of the entire global oil supply passes through this single bottleneck. Choking off that much crude had an immediate mathematical consequence. Global oil prices spiked violently, breaking right past the $100 a barrel mark. As shipping lines reported immediate disruptions, investor sentiment whiplashed. We saw sharp intraday drops across the indices as traders reacted to each new report of a stalled cargo ship. But then, hours later, rumors of potential peace talks between the U.S. and Iran would surface, causing the markets to immediately rally right back. This back-and-forth trading action revealed an incredibly fragile environment. Algorithms and human traders were operating entirely on minute-by-minute headlines, swinging billions of dollars between fear and optimism in a single afternoon. Despite that intraday chaos, two distinct pillars kept the broader market from collapsing. The first was the energy sector. Those $100 oil barrels translated directly into massive, immediate profit margins for producers and refiners. The second pillar holding the market up was big tech. Institutional investors continue to pour capital into artificial intelligence and semiconductor manufacturing. The prevailing belief on Wall Street is that the growth trajectory of AI is so steep that it overrides the risk of overseas conflicts. Major financial institutions like Morgan Stanley and BlackRock actually updated their guidance this week, taking an even more bullish stance on U.S. equities. Foreign investors actively liquidated their international positions and aggressively moved capital into the United States. During geopolitical instability, the U.S. economy functions as a financial safe haven. Its sheer size and liquidity draw in global cash looking for security. So the record highs make sense when you add up the pieces. Booming energy profits, relentless tech buying, and an influx of foreign capital created a structural floor that the negative war headlines simply couldn't break through. However, Wall Street's resilience doesn't shield everyday consumers from the realities of a naval blockade. When crude oil nears $100, the cost to fill a gas tank rises quickly. This sudden jump in basic energy costs has brought the fear of broad inflation right back. This flowchart shows the chain reactions central banks fear most. High oil pushes up inflation, and if inflation stays elevated, the Federal Reserve is forced to keep interest rates high to cool the economy down. And the longer interest rates remain elevated, the more expensive it becomes for businesses to borrow, hire, and expand. The U.S. stock market survived a chaotic week of war risks with surprising strength, but prolonged high energy costs act as a slow burn threat, creating an inflationary pressure that could easily pull the rug out from under this rally in the months ahead. Thanks for watching. To keep tracking these market moves with us, hit the like button, subscribe to the channel, and I'll see you in the next breakdown.